This robotic trading quick lesson will be entitled Hammer Time, not after the wrapper, but after the candlestick pattern. For you mid to older range folks, I'm sure you get the joke here, but if you're on the younger end of the spectrum, just go to YouTube and type in Hammer Time, and I'm sure you'll quickly see what I'm referring to here. But what this video is going to be is just a way that you can use the hammer candlestick and the pattern to pull profits out of the market. We're going to use an actual example that happened to our subscribers of the newsletter, and that way you'll see that this isn't just some pure theory, that this actually can take place in the real marketplace and it can be used to pull profits out of the market. So the first place I want to start is just looking at right here. This is my email account, and if we scroll down some, you can see right here November 3rd 2012. So this is when the newsletter went out. I know there's lots of games out there with people kind of fudging the numbers and trying to do trickery and all that stuff. So I'm going to try to do it as best as possible to show that this really did happen. The subscribers of the newsletter know this happened, but if you're watching this and you're not familiar with bullwarriorstocks.com, which is the newsletter, then obviously you don't know if I really sent this out. So again, this is my Yahoo. We're logged in right now, and you can see up here, this is the official date that it got sent out, November 3rd. And we talked about it for the week of November 5th. These are our warrior charts, and what we do every week is just pick out 5 different charts in different setups. So on this particular week, we had our bottom bouncer play for DTG, and you can see right here, as I pointed out, the hammer candle here. So now that hopefully I've established that it really did go out on November 3rd for the week of 11/5, let's go to the Wall Street Journal. Up here you can see that today is Wednesday, November 21st, 2012. And let me refresh that real quick just so you can see it is still November 21st, 2012. So now we're fast forward a couple of weeks. So with that in mind, let's take a look at the chart here. And here we are again. This is a different platform, but same thing. You can see there's that hammer candle that I pointed out. And let's just see what happened over the next couple of weeks. So we had that little consolidation. This was Monday. The next day exploded. You can see there another nice day, and then that's when things really got exciting. Then we had this big gap up here, a couple more days of consolidation, and then it has come all the way up here. So again, this is where it was when we released it. That was Monday morning of the following week, and then there you can see what ultimately transpired. Before I go any further, I do want to make a warning. It is a little bit more simple, or it is a little more complicated, excuse me, than just looking at a candlestick and then throwing money at something. So I don't want to come across as all you have to do is find a hammer candle and you'll be good to go. There is more to it than that. All I'm touching on here, though, is I want to point out how the hammer candle can be very effective. So if you don't understand charts and don't understand the overall concept of them and other indicators and other dynamics, don't go out there and try using the strategy. So I do want to be upfront about that. I am taking the simplistic view on things, so it has a lot more to do than just a hammer candle. But keep that in mind. So don't go grab your kid's college tuition and start buying any chart that has a hammer candle. There is more to it, but for this video's sake, I'm just going to focus on the hammer candle. So here we are, the result of the play. As you saw, this was Monday morning, and then over the course of time it went all the way up here and then eventually did hit a high of 87.95 for a potential gain if you played it perfectly of 18.4%. Actually, it should have been a little bit more if you understand charting, because there was this gap up and then it pulled that back, so you would have a little bit better entry, but I'm just assuming you bought right in at Monday morning. But again, if you understood charts, you would have probably gotten a better entry, but just taking the worst case scenario that you bought right at the open, even with that, give it a couple of weeks patience and you would have had a potential 18.4% move. And as I note down here, and the great thing about this is whether you put $1,000 or $100,000, because this was a big board, you would have had zero worries about selling. Lots of people out there, they say they see these big board stocks, and oh, you can't make any money in those, and oh, it takes so much. And yeah, it's a little easier to get 100% if all you need is it for it to go to 1 penny to 2 penny. But at the same time, could you ever put in $100,000, or for that matter, if you put in $1,000, are you going to be sitting there worried about being able to sell? Now, of course, there's pros and cons. I'm not saying you shouldn't play either one, but with plays like this and with just charts in general, you can help figure out what sort of demographic of charts you want to go at, whether it be a big board or a penny stock. But with ones like this and ones with charts, you can put yourself in a position where it doesn't matter if you're just using 1,000 or 100,000. You can still pull out of the stock without any worries about being able to sell because the liquidity is so massive. And just as a side note, as I put here, with one trade of $1,000, and if you only captured 15% of the move, you would be able to pay for the robotic trading course, and I'll get to that in a second. But the point being, find those charts with hammer candles. And is this going to happen every single time? Obviously not. But this really did happen to us. It really did happen for our subscribers. So it's by all means is possible, does happen. This isn't just some theory. But again, it does take more than just that hammer candle. There are some other things that I noticed and so forth that made me want to alert it. But the point being, the hammer candle was the driving force. So charts does work. Charting's worth learning. If you haven't learned it or are unfamiliar with it, give it a try. Thanks for watching the video. Hopefully you found it helpful and pulled out some things that you can use in your trading strategy, whatever that may be. If you did find it helpful and informative, then I'd encourage you to check out a couple of these resources here. The first being our robotic trading course. As you can see, it's over 8.5 hours of teaching, so there's plenty of information. There's all sorts of stuff, and with it you'll be able to build your own strategies, learn about charting in general, and just really be able to, like it says, profit in any market environment. Because remember, just because the market may be bad, you can always short and things of that nature. So with the course, it goes over how to use charts, and when you learn the foundational things like that, then you can begin to build your own strategies that benefit you and fit into your personality and so forth. So I'd encourage you to check that out. And also on that note, I'll be the first to admit I'm pretty biased when it comes to it. So I'd encourage you to check out the third-party reviews and testimonials. Those were all unsolicited, all uncompensated. So these were just people that were reaching out to us saying, hey, I bought the course and these are my thoughts. So I'd encourage you to go to that link and just check out third-party reviews, because like I said, uncompensated. They reached out to us and wanted to offer feedback because they were happy with the course. Also, we have a Bull Warrior Stocks newsletter that is located at bullwarriorstocks.com. If you sign up for the free newsletter, you'll receive a free ebook with some charting strategies and so forth, a part of it. And like I said, that chart or the site is completely free, no obligations, no hidden cost, no strings attached, anything like that. You can subscribe, unsubscribe whenever you want to, and you're not going to have any sort of cost or anything pop up. So I'd encourage you to check out that. But as a warning, I'd say that it's better to learn charting and so forth, because the Bull Warrior Stock site is revolving around charts. So you got to know what you're doing when you're looking at charts. So place one would to start would be up with the course, and then that way you can gain an understanding and add another tool to your tool belt. So again, thank you for listening. Hope you enjoyed the video. If you have any questions or anything on either of these things, please get a hold of me. Thank you and have a good one.